and Chris. We share all of them inside of our Discord channel. That is currently 40% off. I just mentioned it a minute ago, but you can also get access to Chris Pulver's trade. So everything is available in the Discord and 40% off for a limited time. Chat with us using the link in the chat. We're going to take a quick break. Chris Pulver's taking over. He's got it from here. Stay tuned.
Where are we going again?
I thought you plugged it into the GPS.
Oh my gosh, what is that? What's happening?
Relax, it was a Pulver alert.
A Pulver alert?
Yeah, you know, Chris Pulver. He teamed up with A1 Trading and now you can see all of his trades, and it's all through Discord, so I can easily check them anytime on my phone or desktop. Plus, you can get notifications when new messages are sent.
Frank, that's really cool that you can see his signals, but like, why are you doing that when we're space traveling?
Because I'm bored and we have light years till our next destination.
Another trade already?
Actually, have no idea what that is. We might be in trouble.
Pulver alerts are now available on the A1 Trading website, and for a limited time, you can get them 40% off for the Black Friday sale event. Don't miss out on getting Pulver alerts for the best price anywhere in the galaxy. We're dropping the link to get Pulver alerts 40% off right now in the chat and the description down below.
Nick, Frank, you watching gold?
Roger that, Pulver. We got the alert.
Hey everybody, happy Friday. TGI. MF. F. All right, nice to be with everybody today. We've got a little bit of a push lower. That's totally fine. I closed out a trade this morning on a SPY butterfly at 590. I posted that in the Pulver alerts as an update. Trade cost me 33 cents. Got out of it for $1.05, $6, $7. Right now it's trading for like 75 because we've moved a little bit lower. Very time sensitive, but that is a 218% return on capital. Overall for the week, pretty decent on the income trades. I had SPY 595 put. That's obviously way profitable if you're still in the trade. Otherwise, I closed it out for a winner. I had one that was 118% return on capital. Two of them that I combined for a 28% return on capital, 100% return on capital, 150% return on capital. So yeah, it's been pretty decent. 6 of 8 on just SPY trades this week. I did take a couple losses. I lost on a Q trade. QQQ was a call fly. Took a small loss there. I think it cost me like 30 cents. And then today the Qs I'm going to lose about 60 cents. But contract wise, that's chump change compared to the winners that we've had. So good stuff there. Also snuck a few bucks out of the SPX this morning. I'm debating on putting on another trade in the SPY. We're down over 2% now from the all-time highs. We do have a couple gaps we should be mindful of. So we did fill this gap right here. And I'm going to switch this one over. Now we have that potential gap fill. And let's go. Well, that gap technically gets filled, so I'll move it out to there. All right. So we're just going to see how price is going to dance around in these gaps. If we go to the higher time frame, we're pulling back towards the 21 period. I would look at this. If we go 21 period, let me change the color. If we go 21 period and we kind of fill the election, then I will likely use this as a spot to, pick up a bit of a discount. If we go lower, this is what Nick and I talked about yesterday. It's like, look, I could see this market still being really well supported, but making it harder and harder to go significantly higher. And we just have more of this pull back here, higher high, pull back here, higher high, pull back here. Something where this market is still making higher highs, but it's coming with a little bit more volatility and choppiness and some pullbacks. And if we want to get a lot more exciting, then we could obviously pull back way deeper and still slingshot up to test those highs. And then it just gets a little wild and crazy if we have let's say 5 to 10% swings. That's going to make, investors' head spin. Okay. Is trading halted on ES futures? It shouldn't be. 930 candle. That was just a really simple breakout trade, wasn't it today? Just a nice, simple breakout candle right there. And NQ, same thing. A little bit more noise in the NQ, but candle breakout. So I don't see any halted. I see it's still there. But we really didn't have any directional movement away from this weekly VWAP. It was really choppy all the way to it, down, back to it, down, back to it. And then finally, it wasn't even yesterday. I mean, yesterday was a little bit more directional, late in the day, but it was like poke the low, pull back, poke the low, pull back, poke the low again, pull back, poke the low again. And then today, of course, it's like we gap lower, have some additional flow. It just kept, hammering that floor all day yesterday. And then, overnight, the futures market actually ran with this. And then this morning, even more so. So I am staying out of it for right now, just kind of embracing that we've got some discounts. I took a small loss this week on Baidu. Even though they had good earnings, I got my broker to close me out at my long put level. So I just ended up taking a small loss here. So this is a 245 loss. And let me see here. JD is up 2.7% on the day. Again, the earnings were yesterday. We're up there. We're down to like the 618. I do have a covered call at $40 on this one. Let me go to Pfizer. Pfizer, you freaking turd. What is wrong with this stock, dude? Lowest close since January 2013. It's like, yeah, I know. I am hoping, let me use a different workspace here. I'm hoping Pfizer is some type of bear trap because this stock is driving me crazy. Now my break even is basically $25. I have this out until January. I'm trying to get this thing called away at 27. Euro dollar currently stuck. Okay. When I hear people say they're stuck, that means you're probably trading too big. Look at the dollar index. I said don't call the freaking top on the dollar index, and you're probably calling bottoms on the euro dollar. So the euro dollar, it's not ready to turn yet, man. I mean, this thing's been a falling knife since that election candle. So all I'm looking for, and this would be, if I'm in the euro dollar, this is what I'm doing. Right here, there's a bunch of support. Okay. Now there are ways that I will just buy small and just say, okay, I'm in at 106. Okay. And I'm in at 105 and I'll wait and I'll kind of test that level. Now, if price responds to that level and gets me, back to break even on trade one and a winner on trade two, I'll just close out for a win. Okay. But when you look at this thing, I mean, have we really had anything to turn this up? If you look at this on a 1 hour time frame, have we done anything to show this is a buy zone? Not yet. Not at all. So I would be looking at a smaller time frame. Do we come back into equal lows? Do we kind of consolidate in here? Is there some type of falling wedge or some bear trap type move, and then we can squeeze the opposite way? I mean, you're going to get some confirmation. I would look for confirmation before you're just going nuts on some of these dollar pairs. Look, the dollar's clearly moving. And that path of least resistance right now is bullish. And to not make it feel worse, but I'm going to make it feel worse, what time is it right now? It's November 15th. How many tops and bottoms do we see in the Forex market in November and December? Hardly any. January is more likely a topping month, and then it's going to be like August. So seasonality-wise, what's in orbit is probably going to stay in orbit. And I'm sorry to say, but unless this dollar turns like right now and gives us an aggressive reversal candle, I think this dollar index is coming up to this liquidity level. And to me, this is a big pocket from 108 to 109.50. I don't see the dollar stopping much. Other than pausing, I think it's going to get there. And this is a big old rinse and repeat where we have all these big liquidity grabs by the USD, by the greenback, until it's satisfied, and then it can start to top out, just like it did here, and then it can start to fade. But it's going to take time, and I'm not calling tops and bottoms in November, December. So I'm just saying, man, be careful. Don't trade too big. If you're gonna trade an area, I mean, have a plan. Right? Please have a plan. All right. So I don't like calling the top on the dollar. In fact, if I'm in the dollar right now, I would just be waiting for dollar weakness to see confirmation on other respective currency pairs, or I mean, look at my Aussie dollar. Here's a good example. I am looking at this area to buy the Aussie dollar. Okay. Now, here's what I'm going to do. If I go into New Zealand dollar, okay, I'm going to take this. I'm going to take this trade. I already had pending orders. And my 58.55 got filled. My Aussie dollar, I haven't put in any pending orders yet, but I'm about to. So right here, we have 63.50, 63.50. Okay, I'm going to put in a 63.50. I'll go pending buy. Pending buy at 63.50. And if I get in at 63.50, I'm going to get in again around 6,200. Okay. I'm even willing to trade small enough that I'm going to do a pending buy at 6,000. I'll go 60.25. And then my stop loss would be below 6,000. Okay. To me, this is a big range. This is still a low and a high. I think the market respects all this cluster in here for the last couple of years. And so if I can put in a trade to get filled and it pops up for profit, easy. Okay. So I'm going to add those levels in and look to see if I can create somewhere in here range trade. Now, I said down to 6,000. I'm willing to kind of work this area. Okay. That would be roughly my risk. All right. So I'm going to add this into the FX portion of my Pulver alerts. This is a FOREX trade. Dollar CAD, I'm still long. I'll go to that one in a second. I'm trying to hold dollar CAD all the way up towards like 1.44, 1.4450. I'm just stacking up those trades. So Aussie dollar, pending buy at 6350. Pending buy at 62. I'll go 6225 and pending buy at 6025. These are small trades to level in on Aussie dollar with key support. I will test the support levels with these small entries. My stop area is a daily to weekly close below 6,000. Okay. My profit target would be 6,500 or higher, with major resistance back up towards 6,800 to 6,900. So grab a screenshot of this. So screenshot and post it in 5 seconds. There. So that just got posted in my FOREX trade. Good. And then I'll go dollar CAD because I'm in that trade. Dollar CAD's trading at 40.93, which should be filled on 2 orders. So there's my 40.25 and my 40.75. So that one's filled on both. And I'm looking to stack these orders up through 4,200 and take profit as 4,400 to 4,450. So anything towards this measured move, that's my profit target. I don't know how much of a pullback we're going to get here. I don't really care. But I'd said for months, if we break these highs, I'm going higher. And also, a lot of retail traders are short dollar CAD. I think that's another reason I'm long. Okay. If you're lucky, Sarah's asking for a pullback. If you're lucky, and Sarah, didn't you ask me about dollar CAD because you were short? And I said I wouldn't be short. If I was short, I'd have a stop loss in. I mean, I wouldn't be begging for a pullback, because to me, this pullback at best is going to be just a retest of these highs. If we pull back in there, so here, pull back to retest a breakout point, if you're lucky, and then it goes. But we're at that time of the year where this market, once it's establishing that momentum, it is easier for this market to drift and drift and drift, and there's virtually zero pullbacks. That's the worst case scenario. I know as a Forex trader, that's what feels the worst. I just need a pullback. I just want a pullback. There's a pivot right there. There's a pocket right there, and it never happens. All that does mean is that it will eventually come back and fill that, but I just wouldn't be hoping and praying and begging that this thing's going to give you a decent pullback. So if we pull back to there or we pull back to there, I'd still be looking to buy those dips. Okay. So right now my stop loss, because I'm filling these two orders here, I still have my 4150 and 4200. If this reverses on me, I would have to say that price would have to close below 3800 and I'll bail. But if it bounces here, I'm just going to stay the course. I might actually throw in a trend line break and go after another entry and just kind of stack this thing up. I think this breakout's looking pretty good. Okay. All right. Dollar yen, stay long until it hits the top. Or don't trade it, because the yen is a piece of crap. So, yen, do you do anything? I don't know. I could care less. And what's going to bother me is my Japanese yen futures is up. I looked at a bull call spread yesterday. I'm just, I'm looking to see, like, do we hit this area? I put a chart alarm down there on the, dude, you just got off my lap. I just put a chart alarm down there yesterday on the Japanese yen futures, because I would be willing to take a, bull call spread that gives me, I don't know, let's say I make $300 for risk $200. I do a trade like that. I'm just not ready to take that trade right now. But we are backfilling the election right now. Yes or no? Right? Market blows the top off, and we're coming in for some backfilling, and then we're going to see where this market's able to find some support. Okay, so I'm still looking to add in some credit spreads. Any type of pullback in that region, I still think it's a reasonably supported bull market, so I'll take my chances. What I don't love, however, is current PE. Yep, let me go current PE of S&P. Because I think if I go to 30, is that right? Price to earnings ratio at 30, and we were higher back in 2020. That's not really the data that I wanted. I think it's price to sales. So price to sales and price to peak sales. Last data point, can I go October? Well, you gonna make me subscribe to this stuff? All right, anyway, I was trying to see if we are higher than the November 2021 is when the tech market topped, and January 2022 was when the S&P topped, as we headed into 2022 with a bit of a bear market. So I'm trying to get a data point here that shows we are actually higher than that price point. So that's price to sales. Let me go price to peak earnings. And same thing. Last data point is flipping September. So I'm trying to get more updates. I guess let's just rely on my boy Charlie Bilello to give me that information. Anyway, we're doing some backfilling on the election. I'm good with that. So where am I looking to get back in? Here is a 21 period. Here is a 50 period. Here's a 100 period. I don't have to go super short term on these trades. I'll probably go out, 45 to 60 days. But I'm looking to see if I can get a trade in on a discount. We're over 2% lower right now. So we've had pullbacks there, pullbacks there, pullbacks there. Obviously, this one got a little bit wild with that 10% drop. Pullbacks there, little 5% drop, and then a lot of little tiny pullbacks through Q1, Q2. So this is just another little pullback. We'll see. I could also see a lot of good stuff priced in that if the Fed, let's check the Fed tool real quick. Because as we saw Powell speak yesterday, probability of a cut is right back down where we said. Look at how crazy this market is. Okay. We were up to 82% and then down to 55, then back up this week at like 75. Yesterday towards the close, it was down to 72. Where is it this morning? 55%. So we might come into the Fed meeting on December 18th around 50-50. And that's obviously going to be a difficult call for the market. So I think if we have the market pricing in that there's not going to be a December rate cut, then this is a pretty appropriate movement. Okay. And then it's going to be data dependent. I had a chart alarm go off on my 10-year yield today. So 10-year yield is up 0.77%. So we're up to some fresh highs again. Fed funds rate, 10 in the 2-year, still just above that 0 line, and the 10-year and the 3-month is still climbing up. This is my concern in 2025. If we get that 10 and 3-month, that 10-year 3-month inverted or disinverted rather, that we are on borrowed time, I'd say within maybe 3 to 12 months of a recession. Or again, you can call it whatever you want. I just think we'd have 3 to 12 months for a reality check and just see some repricing. If we got stretch away moves from those 200 moving averages, it would be likely to see some reversions. Okay. Also, bar count wise, we have got a decent bar count. Right now, we're sitting around 260 bars away. The QQQ did end up finding that. Another trade that'd be interesting to watch as far as bar count is Nvidia. It's down on the day. We go all the way back here. This one's almost 500 bars away. We're at 458 bars. So I think Nvidia, and this is me asking, but I'm hoping Nvidia will do something like this. Find some more reasonable pullbacks, and then I can establish some long positions for the longer term. If we get a pullback into this 200 EMA, I will establish long positions at least 12 months out and trade some Nvidia. But that would be an excellent discount, right? I mean, that would be a pullback of probably 30+%. That'd be a 27% discount, right? That would be close to the hundreds. There's really good premiums on it. I mean, hell, because of the split that we had, I could buy shares and also work the cost basis down there too. So Nvidia is definitely on the radar. Netflix pulling back a little bit, which I'm happy to see. Kind of the same situation. I'd like to see some volatility in Netflix to come back into my supportive moving averages. Tesla hanging in there at 317. I put a lot of exposure on Tesla, during the election, before the election, now after the election. I think Tesla still looks good technically to get up to all-time highs. Berkshire, I'm going to hold off on that one. I tried to get filled on this trade. I canceled that one so I can get rid of that one. One company to keep a close eye on over the next 12 to 24 months will be Berkshire Hathaway. They have been a net seller of stocks. Buffett has raised a ton of cash. Okay. So they will be in a position to establish some pretty strong, advantageous buying positions wherever that is. I mean, if they're raising $320 billion of cash, or being a net seller of stocks and having that much cash sitting around, I think they're just waiting for an opportunity. Okay. So I think that, yes, they perform pretty well. They're not doing buybacks. They said they wouldn't buy back their own stock at these valuations. So, I mean, I think that speaks volumes that, yeah, there's opportunities they just want to wait for. I know Buffett's not a young guy. I mean, he's 94 years old, but that dude's pretty patient. So I don't know. It's going to be interesting. That's going to be a shakeup in the world too. It's your Warren Buffett is, if and when he passes away. Who knows? Maybe that guy's always he's got Benjamin Button disease now, so he's just going to get younger as the years go on. Just kidding. All right. We have a decent little sell-off on the day. So I mentioned this earlier in the week. We had this $31 move from the election. And this week, the average ATR, by the way, is $15 on the SPY. It's like $15.70. And we have gone from high to low around $13.88. So what was today's move? It was the market deciding it's going to try to hit at least the weekly average or close to it. Okay. So and that's why I was really skeptical going into this week, as we only had, 3 days of trading, Monday, Tuesday, Wednesday, everything was within about $6. And then Thursday started to test the low, made a fresh low. It's not a surprise we broke out lower today. Okay. Is that low enough? I don't think so. I'd like to come back in here and maybe fill this gap before I start establishing more positions. So, I don't think this has anything to do with announcements. I think if there's anything this market's going to say, why would we sell off? There could be profit taking. There could be the reality check that the broker or the Fed is not going to cut rates in December, and likely not going to cut rates much or at all in 2025. We have had our CPI data. You can go into the Edge Finder and see that we've ticked higher, right? Does BRK have options? They sure do. Yep. I would be looking to trade options on them. So BRK. So I've got the B shares right here. I can trade options on it. There's weekly expirations. Yep. I can trade Berkshire for sure. Okay. Let's go to the inflation data. And I think this is there's a couple of magic data points here that'll be important. This is where we were over a year ago. Is this where we're heading in the next month? That's very discouraging to see the Fed cutting. Okay. And they cut twice. They cut 50 basis points in September, 25 basis points in November. But to see this going higher, I don't think the Fed can sit here and say with a straight face, we're still going to go after 2% inflation when we possibly tick back up above 3%. So, I mean, if they pause, it's probably appropriate. The economy's sitting here at all-time highs. The labor market has improved enough where it's not the big Psalm rule like everyone's worried about. We had good data points right after that July print. So August was fine. September was okay. We had some displacement with the hurricanes this fall. So I mean, once that was kind of made right, it's like continuous jobless claims going lower. Initial jobless claims are still lower. I mean, historically speaking, we're still in a fairly tight labor market. Average wages are getting up there. But point is, the job market isn't necessarily the big concern. I think we're back on the Fed thinking about inflation. And so what do they have to do? Well, they can't let this happen again. If this happens where we go down in trend and then up in trend, we can't let that happen. We will be looking at way lower S&P and Qs, way lower. If we go to a second wave of inflation that creeps up above 3.5%, this market's going to turn on itself so fast. There will be so much unraveling of profit. This 20+% it's had this year will probably be cut in half. But that's month to month, and so it's like, do we just slowly inch higher? Maybe. Okay, but I'm just saying the trend is no longer good, right? This was a decent trend over 5 or 6 months. 1, 2, 3, 4, 5. We can even say 6, 7. So over 7 prints, it got better. Now it's not. Now, I know that one data point doesn't make a trend, but if we do another print in December, which is going to be November CPI, PPI, and PCE, we still have PCE at the end of the month. But if we're trending higher, we're right back in the same thing where this Fed has seen zero improvement over a 12-month window, almost a 16-month window on inflation. And, this election, by the way, I mean, you can say what you want. I mean, we have a convicted felon. Is that true? That's now president. But what was the biggest concern in the U.S.? Inflation in the economy. And the country thought, we've got Trump that could do a better job of inflation in the economy. He probably has more wild and radical policies because now we have the Republicans in office that are in the House and the Senate and the Republican president. So what are they going to do with it? We'll find out. Do they enact programs that are better? Do they just make these crazy reforms and swings and everything is just a giant reset? I don't know. But that's what we signed up for. So buckle up because it could be an interesting 4 years. So I don't know why we'd sell off outside of this is a bit of a reality check. I said all week we could probably backfill this election gap, and we are doing that. So I'm going to wait. I'm going to be patient. I think the market is set in order. So if we have this correction back down to fill this election candle, two ways I look at this. Either one, this is an opportunity to get long and see if we kind of range here for the rest of the year. Okay. Or two, if we test the low or break the low, is the market interested in buying? Is this a dead cat pounce and there's more downside? I still think this market can come back and find the 200 moving average. But from that point, I will be gladly buying some more. I'll be pretty aggressive there buying some more. Okay. But in here, I'm a little bit more tentative because yeah, it's a test, right? But I wouldn't say that that's the greatest bottom to pick. It's like, look, I'm going to buy as low as I can, you know? So that's all. All right, let me go through some other stuff. What did I do? A pretty active week overall. I mean, I'm trying to think of my trade counter. Baidu, Baba, I've got to work on that freaking Pfizer position. That's going to be super annoying. I mean, hell, I might just exercise Pfizer and flip it around that way, but Pfizer's really making me mad. So we're down to $25. This is the lowest move in over a decade. The last time Pfizer was that low was, yeah, back in 2012. So bucket of yuck, I would say. Meanwhile, I will have some profit today, likely getting called away on SoFi. SoFi needs to stay above $13. It is. I've got the in-the-money call. So the nice thing about this is I put in a covered call that gives me a cost basis, where if I get it called away, it's like losing the stock today at $14.15. I'm getting the stock called away and it's trading at $13.37. So in essence, I've kind of made this like 80-cent surplus on the week by letting it get called away this week. I'm okay with it. I'm going to make, I think maybe $1,100 on SoFi over this little stretch. I'm good with that. Other ones that are looking decent. Chewy's been okay. I've got a covered call at 37.50 actually. 37.50 covered call. That's a January expiration. So that's up here. I'm going to keep an eye on that one. And I'll just do a quick spot check A to Z. My futures trades are going better now. So this one is now up $300. That's my 60.25. That's a nice little hedge on MES. Do I think there's more? I hope there is. Let's find out. So if I go to MES, go into the daily chart, this is why I added those hedges in this week. Okay. We're right back at a 20 or a 21 period moving average. I'm going to hold on to this MES hedge and see if we can get down to a 50 period. Okay. If we get down to this 50 period, I might bail or just move a stop loss and see if this can go lower. You know, I don't know if we're going to have this huge collapse, but you know, basically my risk was $300. I'm matching that risk. At least I have some profit. If I don't do anything, I'm still making the full risk and the portfolio goes up. If we turn, my portfolio goes higher and I eat the $300. If we go lower, I'll hopefully turn that into maybe $700 to $1,000 and I'll take some profit there. I don't know if he is, Ryan, but he was. He certainly was. I just don't know if he is. You know, I is long China. Okay, I am still long China with a little bit of exposure. I did let some losses occur this week. I took a credit spread on Baba. That's going to be a loss. I took a credit spread on Baidu. That's a loss. I'm still sitting here with a FXI position and KWeb position. JD is the one that I own some shares on. I'm trying to get it called away at 40. My cost basis is down to $38 and change. So I'll continue to be very aggressive in working this lower. And look, this is a good example of, as I walk through these trades, if I can get JD, even though it's been down, I mean, look at the highs. We had highs at like 47. We bought this thing. Part of the Pulver alerts as well was we bought this thing right here at 32.50 and we closed out at $45. So that's a pretty good gain. We timed it obviously pretty well. And then I got back in this cluster with a credit spread. I took the assignment. I worked my cost basis down to $38 from an ownership price of, I bought shares at 44, almost $44. So from 44 down to 38, I've already lowered my cost basis by $6. Now, I mean, from a percentage standpoint, $6, okay, a $6 decrease in cost by a $44 stock. I mean, that's a 13.6% decrease in my position. That's good. Like I've saved that much on using options. So what I'm going to try to do is continue to work my cost basis lower until I can get this one called away for maybe, I mean, realistically, I need this to be at $1. If I can walk away with $1, I'll make $500. $1.50, $2, you know, I'm obviously a little bit happier with those type of profits, and I'll just make the repair. So I think I have 4 accounts at that price. So, I mean, if I can, I'll just say conservatively, if I make $500, I make $2,000. And from a stock that's down, you know, from this high to this low, I mean, it's down a decent amount, right? That's a pretty big pullback. It's down 31%, and I can still flip this thing for maybe $1,000 profit, or, you know, maybe on the portfolio, maybe $4,000 profit. So it's going to take some work. It's going to take some patience, but I will do the work, and I have the patience. So anyway, if Michael Burry is still long in China, good. I know JD was one of his favorites. I don't know if he was in Alibaba and Baidu a ton, but those are fundamentally still pretty strong. I just think we need to see, I don't know, we need to see either a vocal push in China, where they need to keep adding real stimulus to the markets, and they need to put in a floor and keep that floor and defend that floor and be vocal about that floor. If they are, good. Then we have a way to get back to these highs. One thing I'd look at on China would be this: high to low, lower high to lower low. Okay, let's say we stabilize in here and we rip back up here for a bullish pattern. That would be a good spot to be looking to return long China. But it would be defined risk, because nobody knows what's going to happen here, right? What I am noticing came out yesterday, added more. Okay, that's good. Good. I mean, the one thing I do like about Michael Burry, if you ever watch The Big Short, I know Christian Bale played the character, but Michael Burry is not an emotional trader. Like, Michael Burry is a data-driven, you know, he finds value. He takes heavy bets. I mean, his fund is taking a 5, 10, 15% position in something, and he's going to grind it, you know? So anyway, yeah, it's fine. If they go up, great. But what I'm saying is, if I can see price give us something like that, then maybe there's another play there to get back to the highs. I still like Alibaba and Baidu. The one thing I have been noticing too, is I checked this yesterday, this would be money supply. If you look at US money supply, it is back on the increase. Now, the last data point I think was in September. I wish I could get, I don't know if this is quarterly only. So if I go September, July, so it's got to be a quarterly data point. So is my next one going to be December then? I would imagine this is higher. Okay, but from back in here, this is over a year ago. We have been increasing money supply in the US, and you can look at China and see the same thing. So China money supply is where? China money supply up. Okay. So when you have US money supply increasing, China money supply increasing, that's a lot of liquidity to the global economy. That's still good, as long as we don't see that our junk bonds are dropping off a cliff. Now, they are down, like spreads are a little bit wider right now from your AAAs, Bs, and Cs. They're down a little bit, but does this look like it's in free fall mode or anything? No. So, I mean, it's still relatively tight. There's nothing unraveling yet. So if money supply is in and credit spreads are still tight, I mean, the market will just continue to be the market. Okay. From a commodity standpoint, I'm watching. I mean, I need to figure out ways to play. I'm going to do some research this weekend. How can I trade palladium? It's down here at these multi-year levels. This goes back to 2018. You know, if I can trade some options on a couple of things versus just buy and hold, I'll probably consider that. Here is platinum, same type of thing. If we come back into a nice attractive zone, I'd be looking to buy some of that. We are on the corn futures off the lows from August. I'm just going to wait. I'm going to see if we come back into some lows here of agriculture or just commodities in general take a bit of a hit. This is soybean, same type of thing. Do we fall into some really nice lows? Here's wheat, same thing. Do we fall into some really nice lows? Cocoa is just choppy. Wow, that's crazy choppy. I mean, it's stabilized right around that 50%. That's an impressive, kind of an impressive floor, right around that 618%. So there's still some interest here in cocoa. I'm curious if this gets a retest of the high. There's two spots I trade cocoa. Either one is we come back down to these lows, or two, we come back to these highs. I would option trade the highs. I would option trade the lows. I'm not going long the contract or short the contract. I'm just going to trade defined risk. Okay. All right, let's do some currency pairs, and then if we got another guest on, let me know. Otherwise, I'll probably go another few minutes. I just want to rip through some currency pairs. So I'm still long on Aussie CAD right now. I'm still long on Aussie Swiss right now. My yellow boxes you see there, my measure moves, yen pairs I'm not doing much on. Aussie New Zealand I'm still waiting on, trying to get a good trade. Okay, Nick's ready to go. All right, good. I'll wrap this up in a minute then. I'm just going to do a 1-minute crash course. I'm putting in those trades on Aussie dollar today. Okay, I'm going to start scaling into Aussie dollar. New Zealand dollar, same thing. I'm going to scale into this one. I was filled at 58.55. I'm going to add these other ones in. And I'm trying to get some support where this will kind of slingshot its way back into some profit. Let's go CAD Swiss. I'm still holding long to that yellow box at 65. Euro Swiss, I'm still hanging out, trying to get this one back to parity. That's 1.00. Euro Pound, I am currently long. It's break even. Pound Swiss, I'm long. Still trying to get this one to 1.20. And then the dollar basket, dollar CAD, I'm long right now. Dollar Swiss, I'm long. Dollar Swiss is going to be a big old profit, hopefully at 9,200. I've got the profit set right there, so off we go. Dollar yen, I don't know. Trade at your own risk. Okay. All right, the real question of the day is who's winning the fight tonight, Mike Tyson or Jake Paul? That's what I want to know. What's the A1 Trading followers poly market say? What's our consensus? I know Jake Paul got slapped in the face yesterday. All right, anyway, I'll let you go. Happy Friday, everybody. Enjoy the rest of the week. Nick, session's yours. Thanks.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
What is going on, everybody? Happy Friday. Welcome to the 11 o'clock segment of the A1 Trading Show. My name is Nick Phillips. Just going to take a quick look at a couple things this morning. Obviously not looking to get involved in anything this late in the day on a Friday. Interesting spot here on the Doxy. When we're looking at it on a daily time frame, we're hitting some of these highs that we were tapping into just over a bit of a year ago, near a year ago. Now, for me, I'm still bullish on the dollar since the Trump victory and some of the proposed policies that he has in place and what they could mean for the economy as a whole. However, I do think that there's a possibility that as we are moving towards the end of the year and markets are starting to slow down liquidity wise, I think there's a possibility that we see something like this, some kind of a tapering off of some of this excitement. The other thing I could see would be a bit of a bull trap as we pull up, break some of these highs. Everybody gets really excited. Doxy's trading higher than it's been in, when's the last time we were at these levels? 2 years. Bull trap out, and then liquidity slows down and we pull back and sort of just hang out around these levels. Excuse me. I've been out of the show for a couple weeks because I've been fighting this nasty sinus congestion thing, and so I'm hopefully going to be able to get through the show today without too much coughing. So my bias on Doxy is still bullish. I just am a little skeptical about this end of the year volume. I could see us doing something like this, where we hang out for a while at these levels and we just sort of consolidate here and do a bunch of nothing until January inauguration happens, policies are officially announced, and then we start to get some clarity. I think the December meeting for the Fed is likely going to be a pause. I really wonder why they went 50 basis points in September and then followed up with a quarter basis point cut this month. It really doesn't make much sense to me with the strength that we're seeing in the economy. So, in my opinion, I think we're going to start to see them scale back their cutting. And if you go to the FedWatch tool, we see we're nearly 50-50 on whether or not we're going to get a cut in December. And the closer that we get to this 50-50, the more my bias is baked in that we're just gonna pause. You know, I mean, I could see maybe, obviously an outside case for a 25 or a 25 basis point cut, but it really doesn't make much sense to me why they would continue to cut with such a strong economy. Lizzie said, since election, I've been struggling with entries. I only trade US 30. So this is the other side of the election is we have, again, this incredible rally to the upside on equities. It's obviously been a year-long thing. Let's go look at Dow. You said US 30. Excuse me, guys. I tend to not look at this too much. But some of my thinking is as we move into the end of the year, things are slowing down. This big Trump move, is kind of what I equate it to. Is this is a Trump move? This big push that we've had since the beginning of the month, since the election. I can see some of that excitement tapering off. I can see the markets going, okay, cool. We got this big move, but I don't want to say we're going to get a big fall off where we pull back into some of these areas. It very well could happen. I'm still bullish on equities, bullish on the Dow Jones. But I think as we move into the end of the year, we could see some just real tapering off. Maybe we get a couple more days of push and a fall off. Again, also depending on maybe some of the economic data that we have coming up. I just don't see another real substantial bull leg happening towards the end of this year. I think as we move into the end of the year, we're going to see consolidation and or some significant pullbacks. So if you're looking at Dow Jones and you're trying to trade it on like a daily basis on your entries, personally, I'd be looking for sells. Now, that also depends on where. Like, you're coming into a pretty strong area of support right here on the, if we look at the 10, 15 minute. You have to be wary of this level that we're at right now. This could be a decent area to buy up from again on a smaller time frame basis. Scalping out of this, day trading, getting some day trades maybe into next week out of this area. But I could see price playing around for the next month or so. Again, barring any major developments on economic data or any other fundamental side of things, I can see price bouncing around, playing in this area, just not really going anywhere, but consolidating through. See, I'm looking at it 30-minute. Let me back out to the 4-hour. Let's mark the end of the year. So between now and December 31st, I think I marked 30th, December 31st. Let's see here. We'll mark this high up here as well. This is going to be a bit of an arbitrary path, but basically what I'm trying to get at is we've had this big Trump trade move. The election happened. Cool. Had this big push. I could see one of two things happening, really. One, markets start to buy in here at this level of resistance. We get a little bit of this kind of action, maybe a push back up. I don't know if we break this high again before inauguration, maybe, possibly. But I think the most likely scenario is one where we sort of just consolidate in these levels, maybe even up until the inauguration happens. Again, pending any massive changes, especially because I think we're going to get a pause in December. So no real change on interest rate outlooks. The sort of the excitement about Trump winning dissipating, markets sort of just being supported, staying supported at these levels. On an intraday basis, looking at like day trades and stuff, I would be scalping major levels. So we tap into this 4-hour area of support, resistant or previous resistance, possibly new support. As we tap into here on these lower time frames, look for opportunities, solid price action indications that we're going to continue up. So a decent day trade that may or may not set up by the end of the day. If it does set up by the end of the day, it's kind of going to be a little annoying because it doesn't necessarily give you a good opportunity. But from here, which obviously this is a bit of an exaggerated leg, but there could be a little bit of a scalping opportunity that exists if we get this to play out. Little head and shoulders, tap back maybe into this area of support. But I would be treating this like not necessarily a trending market, but I'd be looking at it as almost like a consolidating market over the next month and a half, especially because really the entire month of December, you don't have the entire month, in my opinion. You have up until about the 20th, 21st, and then things really are just like, good luck. You're kind of, I don't know, you're trading a lot of chop, I think, that last week of December. Yeah, so that's pretty much my outlook for all of the, Dow, ES, NAS 100. Obviously, they all behave pretty similarly. Not exactly the same, but similar. Tech stocks being a little bit more of an interesting batch, I think, because of some of the proposed policies coming out of the Trump administration. But again, a very similar outlook for the end of the year, where we just see a range-bound market like we had basically the entire month of September and October. So pre-election, where do we get our 50 basis point cut? Right here. So 50 basis point cut. Market takes that, runs with it, super excited about it, and then that excitement kind of fizzles out. That excitement fizzles out, and then what do? We range, consolidate, boom, consolidate, and then Trump victory, boom, market's excited, ranging, pretty significant pullback back into this area of consolidation that we hung out in for the entire basically later half of September and all of October. And now I could see for again the remainder of the year a consolidating market. So when you're thinking about these kind of times in the market, just selling highs, buying lows is sort of what makes the most sense. Instead of just trying to buy the lows and hope we rip to the upside with really no catalyst, just scalp the tops and the bottoms. Right, let's see. Touched on Doxy, I think the only thing I didn't touch on was ES. But again, ES, very similar outlook for me, which is S&P 500 on the futures market. Very similar outlook. Again, we see this September rally based on the 50 basis point cut. Consolidation. I'm going to pull this all the way over, actually. Consolidating markets after the markets sort of take this 50 basis point cut rally. Cool. We no longer care. We're excited a little bit. I don't know what happened here. I can't remember exactly what happened at the beginning of October, but still not a ton of movement comparatively to when Trump election happens. Boom, big push up. Now the markets they've digested this information, and I don't know that the excitement, the everything rally is got as much oomph behind it. So I can see us doing remainder of the year consolidation behavior. And this consolidation zone might look different, meaning we could be testing this. We could be testing this previous area as new support, and then the consolidation zone ends up being here at these new highs, similar to how it was here at these new highs. And we just move this up into here, and price consolidates in this area. Sort of my outlook for most things moving into the end of the year. Currencies aside, currencies a little bit different, but when it comes to all the U.S. backed pairs, a very similar outlook. Again, kind of depending on what happens December for the Fed meeting, and if the Fed comes out and says anything drastically different, or we get a massive shift in the labor market or inflation all of a sudden, we get a crazy number of PCE at the end of this month, which none of those things are expected to happen. It's sort of looking like inflation it's moderated significantly. It's the labor market is still strong. We have a relatively high unemployment number. I say relatively high only because of the previous dot plot projections were above those for the end of the year. The problem with the labor market data, excuse me, guys. The problem with the labor market data right now is the effects that the hurricanes and the strikes from the October timeframe had on data collection. So kind of ironing out, letting those uncertainties sort of dissipate out of the market. You've got that sort of element playing in with the year-end things, makes the labor market side of things a little bit more difficult to judge, which I think is sort of it's sort of the Fed's main focus, because inflation has come down near their target. Now it's just about continuing to make sure that the labor market remains solid. But the labor market remaining solid is kind of tough to project when you have issues with data collection based on major storms and port strikes happening. Take, for instance, let's see. I don't know if you guys have already gone over this in the show. I'm sure you have, but I can't remember. Was it the first? I think it was the first. Yeah, so this 12K number on non-farm payrolls, this is just absolutely mind-blowing. When you look at it, when you look at where we've been, let's just take, we'll go November 2024, we'll say November 2022. 2 years, 24 months. For 24 months, the labor market hung out around, we'll say 250. You know, most numbers hung out around 200 to 250. And then all of a sudden, we have 12,000 in November. It's just kind of obscene, makes really no sense, and lets you know that the hurricanes and the strikes had a really massive impact on the ability to collect accurate data during the month of October. So I think we're likely in December. I don't know how long those impacts are going to take to get ironed out, but I could see if the entire month of November things are back to normal and the labor market remains strong, I can see us again pausing in December, no real changes, which again would lead to just massive consolidation. Now, what that consolidation range is going to look like is kind of anybody's guess. But we have, again, this Trump excitement, the Trump rally. I can see it fizzling out at these highs and then just hanging out. Maybe at some of these levels where prices consolidated historically here. The entire month of October in 2023, moving into sort of November, we hung out there. Excuse me. And then again, April, kind of a bit of a bigger consolidation range. April through to really August of this year, the market sort of just hung out here. So I think some of this excitement, some of this big doxy push up is gonna just fade at the end of the year. It doesn't mean that I've turned bearish on the doxy. I'm still bullish on the doxy long term. I think definitely there's potential for a big move up here as we enter into a new Trump regime. Some of the proposed tariff situations. Not that it's going to cause crazy inflation scenario. I think it's definitely going to have an impact in the 12 to 18 month range at least. But yeah, just strong doxy, but tapering the excitement towards the end of the year. Sarah asked, how deep do you think this pullback on the doxy will be, as I'd like to buy but don't want to buy at this current price? Yeah, I mean, I don't want to buy at this current price either. I would say there's two scenarios for me at buying the doxy, which again, year end, probably, not something I'd be interested in. But a major scenario for me would be something like this. Oh, let me do path. We'll go here, pull back, and it doesn't end up being a bear trap or a bull trap, sorry. So some sustained doxy strength above these levels would be nice to see. We get a break above here. I wouldn't necessarily buy on this pullback just because this could be the start of the bull trap. But something where we break out, pop back in, pop back up, pull back, and show continued strength. could be a decent opportunity to buy in there. The other opportunity on a Doxy pullback, again, it's going to be tough moving into the end of this year, but maybe the 105 range. The Trump trade really took off right here at 104, 103.5. So I could see 105 being a good area to buy in at. Just that nice round psychological level. I think it taps back into there, and you could possibly see something like this. Price comes back into here, buys up, but again, that's a question of where do you hold to. I would, if I'm getting in at 104.5 to 105, I'm only staying back in until 106.5, 107. And then maybe leaving runners, trailing stops. I don't know if I would say that the entire election move could get faded. I don't see that necessarily happening. So, aiming to get back in at 103.5 might be a bit of a pipe dream. But 104.5 to 105, I would say sort of this area right here where you've got this resistance. We'll just go 104.35 to 105. I would say this would be a decent buy zone if we get this happening. Oh, you know what? My computer is about to die, and I don't have my charger up here, but I got 10% left, so I think enough to wrap up the end of the show here. The only info they have is November, and a lot of spending happens November and December. Yeah, I think a lot of spending does happen in November and December. I think a lot more happens in December historically. I'd have to pull up that data and look at it. But I'm not sure if that's going to really affect inflation too much. What do I think about Euro USD not being able to break below 105? Yeah, this is, sort of in line with the Doxy. Let me make sure I don't have keep interval the same here. And I'm going to pull up DXY. So, you can see that both of these are major areas of Doxy being at resistance, Euro being at support. The only thing about Euro that I would say would make me inclined to believe that we're going to potentially dip down below this is their outlook for interest rates. I believe I have to find the information. I'll have it readily available. Let's see if I can find ECB. They just adjusted their so 75 basis point ECB cut next month. Okay, of course. The ECB is a bit more dovish, significantly more dovish than previously. So I don't think that's entirely priced in yet. We obviously have a massive pull down to the downside here on Euro USD, but I could see more. I could see this level of support being broken without necessarily the Doxy pulling higher up out of this area. I could see the Euro moving on its own in this sort of an instance. So again, do I want to be selling into this support? Not necessarily, but I don't think there's anything wrong with looking for a bit of a pullback here, again, depending on what kind of levels you want to see, and then a continued sell-off where it does end up breaking below 105. I can see that happening for sure. And on the Doxy, Sarah, you're asking if I see a pullback deeper. Yeah, I mean, I totally see, again, year-end flows sort of coming into play, but I could see us hanging out here. I could see us hanging out between 105.5 and 107. The best buy opportunity, I think, would happen around 105. But I could see that not happening for the rest of the year. I mean, I really, again, pending any major fundamental changes on the Doxy, I could see consolidation happening. And then as we move into next year, wow, I've gone way far into next year. So we're hanging out here all of December, kind of doing nothing. I could see this playing out. Now, where I would want to get in on a buy on this would be down in this zone. So that might not happen until post year end, moving into inauguration season, blah, blah, blah. Maybe we, it would be tough. I think it would be maybe a bit of a tougher play to get the dollar to pull down here. I could see some profit taking happening that could pull it down. It really just depends on again fundamental things and this year-end flow sort of impacting things. This would be ideal buying, but is it going to come back down into that area? I don't know. It's a tough call. So again, if it does, yeah, definitely buying all day at 105. If it doesn't, it would be a situation where as we move into next year, break out of this consolidation, pull back, and then buy up from there would be the two best scenarios I could see. Gap at 103.5. If you're talking about this gap here, I mean, I don't know necessarily what your opinion is on gaps. I know there's a lot of, sentiment among retail traders that gaps always have to get filled. And I've seen them never get filled. So, I don't think that this gap is that massive of a problem for the market. Yeah, I don't necessarily. In order for the market to come all the way back down to here, that's the market fading all of the excitement of the Trump win, which is not to say it won't happen. I just don't necessarily see that happening over the course of the next 3 to 6 months. All right. I believe that is all I have for you guys. From all of us here at A1, I hope you guys had a great trading week and you stay safe this weekend, and we will see you again next week.
Attention! The Black Friday sale is happening now. You can get 40% off everything on a1trading.com, including the brand new stock box, Pulver alerts, the Edge Finder, and more. Thanks for watching today's A1 Trading Show. Make sure to subscribe and to leave a like down below if you enjoyed. If you'd like to join the show, you can become a guest with the link in the description below. That's all for today, traders. We're heading for the moon.